At CSI Accounting and Payroll, we've seen just about everything. We've experienced all kinds of tax issues that business owners can get themselves into. We've used our years of experience to recognize the top items that trigger government audits. Watch this video to learn about the top 12 things that trigger audits so you can avoid those. Let's get right into it. Red flag number one is making too much money. Now, there is no such thing as making too much money. Make all the money that you can. But if you make more than $250,000, your chances of being audited by the government go up. Not because you do anything necessarily wrong, but because of random audits. So if you make more than $250,000, it's more important than ever to make sure you're compliant, make sure you understand the other red flags. And if you make more than $1 million a year, the audit rates can get up over 10%. 10% of returns over $1 million a year can be looked at by the government. Red flag number two is forgetting to claim the income shown on forms W-2 and 1099. Most of the income that people earn is going to be reported to you and to the government on a W-2 form or a 1099 form. The government gets copies of all these forms. So if you forget to include these on your tax return, or if you forget to give these to your tax preparer, you will, down the road, you'll get a letter from the government saying that you owe more tax. Maybe it's just a bill and that you'll pay, but if it's significant, it can trigger an audit. They might decide they want to look into everything more. Red flag number three are when you make charitable donations that are considered large compared to your income. The IRS and most states will let you donate up to half of your income, sometimes 60% of your income, to charities. But when you exceed 10%, it can trigger a look by the government because charitable donations in excess of 10% of your income are considered higher than average. So all you have to do is document these charitable donations, save your receipts, and if you're donating items other than cash, save the receipts from those places as well. If you're donating items other than cash, it's worth more than $5,000, then you have to have an appraisal. Red flag number four is claiming the home office deduction. The reason this is a red flag item is because it's one of the most heavily abused tax deductions in our country. It is a legitimate deduction to claim business use of the home and deduct certain home expenses from your income if you're working from home. This is a trend more and more with people working remotely. The problem is that there are a large number of people that abuse this and deduct more expenses related to their home than they are supposed to. This is why it's a red flag item, and there's one to avoid. So if you do work from home, take the deduction, but consult with your tax professional to make sure you do it properly. Red flag number five has to do with losses on the rental of real estate. If you own real estate that you rent out to other people or other businesses, and you lose money doing it, those losses are typically deductible on your tax return to offset other income. However, there are rules limiting the deductibility of those losses that potentially will affect you. The best thing to do is to consult with your tax professional, and he or she can help you understand these rules so that you can do it properly and deduct the losses that you're allowed to and carry forward to other years the losses that you're not allowed to deduct this year. Red flag number six has to do with meals, travel expenses, and vehicle expenses. These are some of the most abused expenses that people try to deduct on their tax returns, and this is why they are red flag items for the government. All you need to do is make sure that if you have these expenses in your business, that they're legitimate for business. Ask your tax professional what that means, and they can advise you. For vehicles, it basically means that it's a vehicle used only for business and you have other vehicles available for personal use. For meals and travel, it's for business purposes. Red flag number seven is related to red flag number six, but we feel it's important to go into a little more detail on the deductibility of business use of a vehicle. Many businesses and business owners use vehicles exclusively for business. This is what the deduction is all about. As long as you have another vehicle available for personal use, you'll be fine. Where people get into trouble for this is when they either don't have another vehicle for personal use or they have the business own all of their vehicles and they can't prove that they have another vehicle for personal use. This will get you into trouble. Red flag number 8 is when a small business loses money for too many years in a row without showing a profit or closing its doors. The government can determine that this is a hobby and disallow the deductibility of the losses. The likelihood of this goes up if it's a home-based business with no employees. Red flag number 9 has to do with businesses that take in and pay out a lot of cash. If you receive a lot of cash from customers, best thing to do is deposit that into your bank account just as you would if you're receiving checks or credit card payments. When you're paying your business expenses, if you're paying with a check or a credit card, you're going to have a record of that on a bank statement or a credit card statement. But if you're paying business expenses with cash, you're not going to have that. So it's very important that you save all of your receipts so that you can prove that they are legitimate business expenses in the event of an audit. Red flag number 10 has to do with foreign bank accounts. When individuals and businesses in the United States put money into bank accounts in other countries, it's very often a way of trying to hide income from the government so it won't be taxed. The government knows this, and that's why it's a red flag item. Red flag number 11 has to do with cash transactions in excess of $10,000. If you deposit $10,000 or more in cash into a bank account, the bank, by law, has to notify the IRS and the State Department of Revenue. If you make a purchase someplace for $10,000 or more with cash, that place also has to notify the government. Therefore, these are red flag items. The government's going to know, and they're going to investigate these matters. So it is very important that you make sure that these are legitimate business expenses and income. Red flag number 12 has to do with other deductions that are high when compared to your personal or your business income. Since this can include many different things, we feel it's best that you consult with your tax professional for advice regarding if and when you are raising flags that are going to get you audited. Hopefully now, after watching this video, you understand more about your tax situation and what might trigger an audit. We also have a lot of free resources on our website and our YouTube channel, and you can check those out as well. Thanks so much for watching.